Welcome to PhillipCapital's Weekly Market Watch. As the US dollar weakened in the past year, it has replaced the Japanese yen as the carry trade currency of choice among investors. Today, we're Mr. Donnie Liu, a dealer from Phillips CFD, to talk to us about the US dollar carry trade. So Donnie, can you explain to us what the US carry trade is?
By which investors borrow US dollars at low interest rate. The money is then used to buy assets with highest return, including investing those proceeds in the country currency of their choice, where interest rates might be higher or perhaps is expected to rise relative to the US dollars.
Why is the US carry trade popular among investors and fund managers?
The carry trade creates profits returns on the assets bought plus any foreign exchange gains made if the currency of the assets rises against the weakening US dollar. Since the performance of many hedge fund managers is measured in US dollars, there's an attractive reward for them to make bigger gambles every time the US dollar weakens against the regional currency.
What is the impact to the market with the US carry trade?
The US dollars has become a massive carry trade, with virtually every bank or financial institution in the world borrowing in dollars and then channeling this money into financial markets like stocks, commodities, and gold. Therefore, we have seen a huge rise in all these assets, complemented by a fall in the US dollars. With so much of the financial markets action caused by a weakening US dollars, the markets started operating on a beta rather than an alpha basis. This means that picking out individual investments is far less important than simply putting your money into the right sectors or assets.
What will happen when the carry trade blows up?
The longer and bigger the carry trades, the bigger will be the resulting asset bubble crash. The US dollar cannot fall to zero, and at some point it will stabilize. If the dollar starts to strengthen, investors will be selling all asset classes funded by the dollar to cover their US dollar short. We could see stocks and commodities or even gold then entering into free fall.
Do you see such a situation happening?
It may happen if the US economic data improves in the next few quarters. By then, the US Fed Reserve may start to increase the interest rate.
Thank you, Donnie. That's all the time we have for you today. Tune in next week for more market updates.